Welcome back. Still tuned into Chartbusters. Integrated cash logistics player Radiant Cash Management's 387 crore rupee IPO has opened for subscription today. Colonel Devasahayam, who is the chairman and managing director at the company, is joining us now to discuss the prospects of the business and the outlook going forward as well. Mr. Devasahayam, good morning. Thanks a lot for joining us. Well, it's time to talk business because you have seen a revenue growth of 29% in terms of your revenues, which is higher than the industry growth of 20%. Is this number sustainable for you? What is the outlook going forward? And your margins in Q1 increased by 500 basis points. Before that, you were doing margins close to the 24-25% mark. What led to this jump, and is this number sustainable as well?
Well, good morning, and thank you for having me this morning. Firstly, I'd like to say I'm a little different kind of entrepreneur. I was 25 years in the army, and having commanded 2 battalions and a training center. And 21% of our workforce is from the armed forces, ex-armed forces, the officers and men who serve with us. So that brings in a lot of commitment, dedication, and discipline, integrity, and also frugality. And that's one of the reasons we have the best ROE and ROC numbers in the industry. Now, coming on to your specific question of the first quarter, the first quarter is indicative of the future. Last 2 years were COVID impacted. And the current EBITDA margins that we are resting with 84 crores of revenue and 25.5% of EBITDA and over 18% of PAT. That is clearly the future. I can indicate, our growth is driven by the number of pickup points that we have. So at the time of filing the DRHP, we were at 42,000 points. From that, today we have grown to 55,000 points, 13,000 points. That means 1,100 points per month. That's been our growth rate. So I think that bodes well for the future.
Right. Colonel, and thanks a lot for your endeavors towards the armed forces, your services. The nation thanks you, and also thanks you for employing ex-armed forces for your business as well. So to that, we will obviously be extremely happy about. But as far as the business itself is concerned, just wanted to understand, why is it that you need so much working capital? I mean, I'm looking at your competitors' working capital days. CMS Info has 60 days, SIS around 24 days. You have well over 150 odd days. Why is that? And why you, so stretched on working capital?
I don't think there's any stress on working capital as of now. And that will be clearly indicated by the interest that we've been paying as far as our CC accounts are concerned. And we have, as I speak, approximately about 40 crores surplus on our books that we have. We go about it in a very deliberate manner. It is 150 is wrong. It's about 85 to 90 days. That's where we are. I believe in that, and therefore we have zero bad debt.
Okay.
Firstly, given, say, a 30-day cycle, after 30 days of working, we raise a draft invoice 9 days thereafter.
Okay.
And we send it back to all our clients, ask them to check on it. And they come back to us after about 8 to 9 days. And once that is cleared by them, only thereafter we raise the bills. And I'd like to say that though you have said this, we have given the upper number. Almost 60 to 70% of our clients are, the receivable is within 45 to 50 days.
Okay, we get that point. Last question before we let you go. I wanted to understand that you have mentioned buying specially fabricated armored vans. This is something that you've written in the DRHP. Right now, largely you are leasing vans. Why do you want to move from this asset-light model, and what kind of investment will you make in buying these armored vans, that is?
Yes, you're right. It's a shift from my existing policy. We felt that strategically in our board when we discussed that at least there should be 20%, 20 to 25% of the inventory should be physically held by us. And this is because, we are based on leasing and we have remained extremely asset light. but to immediately respond to new opportunities that come, large numbers of cash funds being suddenly required. Secondly, thanks to regulatory pressure, now large number of, we have been reduced to, it's a very consolidated industry, and new opportunities in the cash and transit space are opening up. And so that was a conscious decision as a board that for the first time we are holding a strong inventory of over 200 vehicles on our books.
All right, Colonel, we will, speak more with you as the days progress, as you list, and then you'll have the liberty to also talk a lot more about the future outlook of your business. For now, we just wish you good luck for the IPO. Thank you. That was...
Thank you so much.
Okay, with that, we will wrap up on this edition of Chartbusters. You stay tuned to CNBC TV18. The market continues to be weak. It will be covered by the team of Trading Hour just after this break.